Hey guys, hope everybody's doing well today. I got my miscellaneous Thursday video up, and this is one that has been actually highly requested. So, I do take requests, but it might take me some time to get to them. Okay, I've been asked about this one for like a month, and I'm finally getting to it. And it is a growth ETF, extreme growth ETF that is taking advantage of our remote work, more online work environment that we are in today, and probably is not slowing down anytime soon. So, if you're new here, please remember to like, share, subscribe, comment down below, turn on that notification bell. That lets YouTube know that people want to see my videos, and that would help me tremendously. If you shop on Amazon and you enjoy the work that I do and want to leave me a tip, there's an Amazon link in the description below. If you click on that link, it goes to Amazon. It links to a product, but you don't have to buy that product. You can complete any shopping that you normally would do. Complete that after clicking that link, and Amazon gives me a small commission on qualified purchases. So if you would do that, that would be greatly appreciated. Thank you very much to all that have done it, and let's get into today's video. So what are we talking about today? Today we are talking about ticker symbol WCLD, W Cloud, and it is the WisdomTree Cloud Computing Fund. Now, this is a equal-weighted, non-leveraged, enhanced strategy ETF with the benchmark index of BVP NASDAQ Emerging Cloud Index. Now, we're going to go over, there isn't a whole lot of information about this. This is just came out. The index has been around a while. There's been some changes in it, but the ETF has only been around since September of 2019, so it's not even quite a year old. It's coming up on its 1-year anniversary. So we're going to go through some slides. This is kind of an old presentation, but the methodology of how it picks stocks and all that is still valid. So we'll go over here to the slide, and you'll see this was done in April 2019 because the index has been around a lot longer than the ETF. So let's see. Let's get down to the Emerging Cloud Index. So currently the EM Cloud Index, which is what the WCLD ETF follows, is comprised of 50 publicly listed companies that derive the majority of their sales from cloud computing products and services. Shows the following revenue growth figures: 15% for each of the last 2 years for new companies, and 7% for existing companies that are already in the index. So they have to maintain a 7% revenue growth rate to continue to be in the index. So they have to be listed on the NASDAQ, the New York Stock Exchange, the New York Stock Exchange Amex, or the CBOE. It has to have a minimum market cap of $500 million and have a minimum 3-month average daily trading volume of $5 million. So what makes up the cloud space? So the companies have to derive the majority of its revenue from business-oriented software products, which are both provided to customers through a cloud delivery model, for example, hosted on remote and multi-tenant server infrastructure accessed through a web browser or mobile device, or consumed as an API, or provided to customers through a cloud economic model as a subscription-based, volume-based, or transaction-based offering. So I think like Adobe went from a product offering to a subscription offering. So if you want to use Adobe products, you have to pay per month to use Adobe products. So that's kind of what that means. So revenue growth for the evaluation of a security being considered. We already went over this, but we'll just go over it again. If they're going to add something to the index, you got to have at least 15% annual revenue growth for each of the last 2 fiscal years. And for the evaluation of the security currently in the index, at least 7% annual revenue growth in at least one of the last 2 fiscal years. So if they miss that 7% annual revenue growth, they're out. So that's kind of a great way to keep the growth rate of this ETF going. Let's see. So they need to be listed on the NASDAQ, New York Stock Exchange, have seasoned, whatever seasoned means, for at least 3 months on an index eligible exchange. So I guess they can't just be new. Even if they've been around a while, they have to at least be on one of the exchanges for at least 3 months. The index is evaluated and rebalanced semi-annually in February and August using market data as of the end of January and July, and the index is equal weighted. So one interesting thing about the index, if they go back to when they started tracking it, which was 2013, it has blown the doors off of everything. You're looking at a 410% increase in the index versus 122% for the NASDAQ and 75 and 76% for the S&P and Dow Jones. And that's up till April of 2019. So it's gone up quite a bit more than that in 2020. So we'll go here and take a look at, go a little deeper here. It has $700 million in net assets, so it's still a small ETF. Has a net expense ratio of 0.45. Has a 30-day SEC yield of negative 0.42, so basically it's not going to pay a dividend. And it probably never will, in my guesstimation, unless this, sticks around for a decade and these companies become mature. We'll go over here to the portfolio composition, and it has 54 holdings. In the top 10, there's 20.44%, and in the other, it's 79.56%, so it's fairly equal weighted. 96% is in the United States and 3.8% in the United Kingdom. Almost 35% of the fund is small cap. 31%, almost 32% is in large cap. 27.8% in mid cap and 5.7% in micro cap. So really spread out among the universe there. And Morningstar Style Map has this classified as a mid-cap growth fund. So it leans more toward the small mid-cap companies. And we'll look at the top 10 holdings. And we have Salesforce at 2.2, Workday at 2.2, Anaplan 2.19, Atlassian Corporation at 2%, Zora at basically 2%, Fastly, Blackline, Elastic, Sprout Social, Smartsheet. So a lot of these companies are very, very small, but they have very big growth rates. I wouldn't call them small. They're still billion-dollar companies, but they're new. The one thing about this ETF is you probably don't want to go extremely heavy in it, because this could be very volatile unless you like volatility and you can deal with that, because a lot of these companies are probably not making money, and they can be very, very up and down. So we'll look here. Information technology makes up 98.39% of the fund, with 1.76% in healthcare. That's kind of interesting. And so software makes up 85.68% of the ETF. IT services makes up 12.71, and then the 1.76 in healthcare. So if we'll go to the key stats, we probably won't have any turnover yet. It'll be interesting to see what they do in the end of August or beginning of September. Annual turnover ratio, yeah, see nothing there. Price to trailing earnings, nothing there. So this is all about growth, all about the future, all about the cloud growing and never ending. And essentially, WCLD is a tech fund. So if you want to, that's satellite holding. So if you want to have a little bit of a growth component, or you want to go off into a sector, these kind of ETFs are perfect for that. So we'll look at what WCLD, I call it WCLD, but it's WCLD, has done since September 6th of 2019. We'll compare it to the S&P 500. We'll chart 10,000. And from there, we'll see WCLD since inception, total return of 74.88% for an annualized gain of 76.56%. Total return for the S&P at 20%. That's just, I mean, what can you say? It's just growth. So is it going to continue? I don't know. My thought is it probably will, because we are just continually relying on this cloud, on this work from home, remote work, technology infrastructure that we are developing and that we are probably going to be living in for decades to come. So what are your thoughts? Are you investing in WCLD? Leave me a comment down below. Like, share, subscribe, do all that good stuff. Hit that notification bell. Use that Amazon link if you can, please. I would appreciate it. You guys have the good rest of your week, and we'll talk to you later, and bye-bye. I am not a financial advisor. The information contained in this video is for entertainment and informational purposes only. It is not intended to be investment advice. Please seek a licensed professional for any investment, tax, or legal advice. Thank you.